Welcome to Markets Now. I'm Michelle Work along with Chuck Shelby, Risk Management Commodities. Studied a little bit higher prices in the early go here in grains and cattle. Hogs just a little bit lower. But Chuck, I want to talk about soybeans trying to recover today along with the soybean meal market. We tried to retest last week's highs yesterday and even on Tuesday when we got all that Argentinian frost news. But do you think the market is kind of put a little bit of a high in here? Do we have enough new news, or what news would we need to push past those levels?
It seems like we struggle whenever we get to the upper end of the range. We do get news out of Argentina continues to have problems. We probably factor in a lot of that. There's those in the trade who feel at the end of the day, though, the USDA is still way too high on what the Argentinian production is. But until we get confirmation in upcoming reports, I think the market's satisfied, thinks this is fair value for the information it knows on the soybeans.
So you think we'll just kind of continue to consolidate under these levels then?
Yeah, I think part of it is we also see some farmers selling when markets rally. Then we fall back and we find demand and the uncertainty about what kind of production is really coming out of South America. So a trading range market, hopefully as we move into the month of March, we find reasons to move out to the upside.
Are you expecting that we're going to see some additional Brazilian harvest pressure? Because it doesn't feel like we've seen a whole lot yet.
Well, they've struggled with too wet of conditions, as all producers know. When you get rain at soybean harvest time, that makes it a little bit difficult. So I think it's slowed the flow of beans out of Brazil, but it will get done. It's just helpful as far as not overwhelming the system and seeing a straightforward harvest that has had times when it's been slowed down by too much rain.
You bet. Corn market moving sideways again here this morning, and that's not unusual here lately with the corn market. What do you think it's going to take to make this market move out of this trading range? Is it going to be demand? Is it going to be a production issue in South America, maybe with second crop corn or something like that?
Well, I really think we need to see the export pace pick up significantly here. That's what we've been waiting to see. We know there's problems in Argentina. We know everything other than we haven't seen the proof of those world buyers coming here and picking up what we really need is bigger exports. So as we move into spring, one of the other things to be concerned about is if the Russians amp up and have an offensive, how much corn will get planted in Ukraine. Looks like we're going to have some major offensive happening, and that could be a catalyst if we get deeper into the springtime to see the Russians and what kind of production is Ukraine going to have this year.
Yeah, we're also watching that on the wheat side of things, and it feels like the market really isn't respecting the fact that Ukraine is not going to, or they haven't gotten much wheat planted, and if there's any spring planting to be done, that's going to be a pretty low number too, isn't it?
Yeah, I think that's a major concern coming. The market seems to want to wait, though, till it gets closer to that time window when we get into March and we see what's really going to happen. We're also the negotiations over how much grain is going to come out through the corridors, another factor that could impact the wheat market. Also, we'll see what kind of how the wheat comes out of dormancy out west. You know, went in, it's had some struggles. It's not been a good year for wheat out to the west. So I think there's some reasons. I think it's just the timing of the year. As I talked about earlier, I think hopefully as much of March unfolds that we'll see these markets find reasons to go to the upside.
Yeah, the recent moisture that we've had here obviously was part of the play yesterday in HRW wheat, but that wheat market or that wheat crop has a long way to go here to get back to what is I guess, a good crop here overall. Let's also talk a little bit about USDA Ag Outlook Forum this morning, and we did get acreage numbers out, baseline projections in terms of ending stocks, and really we're looking at an increase across the board for corn, wheat, and soybeans. What is your thought about the projections?
Well, one thing for sure, we're going to see those change in the March 31st upcoming report. I think one thing to take away, the USDA pushed record corn and bean yields. And even then, the carryouts are not really too large for both corn and beans. So going forward, when we get to March 31st, those are the numbers that really count. But I think the takeaway is, again, not not horrible carryouts, even pushing record yields, which that's always a challenge to see if we can make a record yield. But those numbers were pretty much in line with the trade guesses. Maybe the soybeans were acres a little bit low. Corn acres seem to be pretty close. So we combine everything together. Nothing stands out here to shock the market or make it go one direction or the other.
Yeah. And just to recap, 91 million acres on corn with a 181.5 BPA yield. And again, to your point, I agree, that looks pretty high. And then on soybeans, 87.5 million acres. I think that's the same as last year, but the yield number, excuse me, at 52 BPA. So let's also talk about the cattle market, because we've continued to see cash trade strong. The box beef values have continued to push this market along with tight supplies. Now we have this atypical BSE case that's been announced in Brazil, and they're shutting down their exports. How much more bullish news can you throw at this market?
It seems like it's continuously something comes around to support the cattle market. I think the biggest factor, though, is supplies are extremely tight. Consumers have not been turned off by these prices. And one of the big factors to me as we move into the springtime, that cookout demand is huge. So I think the cattle market, again, is under solid footing. Doesn't mean we can't have times when we back up on the futures market, but overall, the consumer's willing to pay the price. Supplies are extremely tight. It's going to take a long time to get cattle supplies to build back up. You could really see the market get explosive when we start retaining heifers, because that's a time when supplies get even tighter than they are today.
Hogs are seeing a little bit of pressure this morning, and I think you have said the bottom is in, but how much higher can you go here? I mean, we're building big premiums into the back months, but we have yet to see maybe the cutout values and the cash trade really, really take off here.
Well, I think the hogs are a market. The best thing I could say about it, again, I feel it's bottom. Going forward here, I think one of the positives for pork, it's a cheaper cut. When consumers are sensitive, they can fill in that supply with pork and be featured at restaurants and things. So as we move into spring, again, that cookout demand is another factor. So I think the hog market is in a slow uptrending market, following along with the cattle.
All right. Thanks for joining us, Chuck Shelby, Risk Management, Commodities, and that's Markets Now.